Perceived safe haven assets Bitcoin and gold were trending downwards on Friday as investors processed the emotional aftermath of China's weak economic data. The BTC/USD instrument slipped by 1.96%, or $158.23, on San Francisco-based Coinbase exchange to trade at $7,917.97. The downside pressure mounted shortly after the Shanghai market opened, leading to a circa $308 drop right ahead of the close. The move downhill reflected a similar price action in China's CSI 300 of Shanghai and Shenzhen-listed stocks, which fell 1.6% on the day. Hong Kong's Hang Seng Index, at the same time, edged 0.7% lower. The drops came after China posted its weakest GDP growth since the early 1990s. The world's second-largest economy grew 6% year-on-year against the forecast expansion of 6.1%. The GDP figure was below closest to the expected that led to early gains in the Chinese equities. Nevertheless, investors remain focused on the broader spectrum of the ongoing US-China trade war, which, despite making some advances after the recent trade meets in Washington, looks uncertain to reach a full-fledged deal. Gold, meanwhile, failed to behave as a safe haven asset for Chinese as it dipped 0.26% on profit-taking after the European Union and the United Kingdom worked out a Brexit deal. More likely, trade uncertainties, and doubts if UK Prime Minister Boris Johnson will be unable to secure UK Parliament backing on Brexit, capped gold's downside. According to Brian Lan, of Singapore dealer Gold Silver Central, gold could remain range-bound unless more clarity on the outcomes of Brexit and trade negotiations surface. He said the yellow metal could trade between $1,475 and $1,503 in the near term. Meanwhile, Harish V., head of commodity research at Geojit Financial Services, said gold's long-term bias is bullish. Bitcoin, which investors treat as a new form of gold, is also trending inside a strict trading range since September 26. The benchmark cryptocurrency's iconic performance against the trade war and yuan devaluations this year instilled a belief that it is the next best hedging asset. After surging by more than 150% in the second quarter, Bitcoin, however, has corrected downwards by more than 43%. That, coupled with the rejection of yet another Bitcoin ETF application, has pushed institutional interest in the cryptocurrency downwards. But supporters within the Bitcoin space hold their trust in the technicalities. They believe the Bitcoin is merely correcting after a strong uptrend, and a next price breakout is on the way. Disclaimer: the author holds Bitcoin and Ethereum in his cryptocurrency portfolio.